Mr. Kevin Lu, to moderate this session on funding the One Belt, One Road. Kevin?
Thank you for the introduction. I feel very lonely here, so let me first invite all my panelists to come on stage, and then I will introduce them one by one. Is that okay? Jin Yong, Madame Wang, Talei, and Lei. So while they are coming to the stage, let me just very quickly say that I work for a Swiss private equity firm, Partners Group. We manage about $50 billion of private assets on behalf of 800 institutional investors. We invest in private equity, debt, real estate, and infrastructure. And the last one is particularly relevant to the topic today. With that, we have 4 great panelists here today with us. We're going to try to unpack this very hot topic, which you would hear these days very frequently in the international conferences, which is the One Belt, One Road strategy, which was proposed by the Chinese government 3-4 years ago, which has really gathered steam over the last few years. So you have Jin Yong Cai to my immediate left, former head of IFC, the private sector investment arm of the World Bank, currently with TPG, and he's going to maybe explain with us both from the IFC angle as well as from a TPG private investor angle how they look at OBOR. And we have Lei, a senior vice president from the Russia-China Investment Fund, which is one of the bilateral platforms I think we heard about this morning between the Russia Direct Investment Fund and NCIC, the Chinese Sovereign Wealth Fund. And to his left and your right is Mr. Talei, who runs the seaport here as well as the free trade zone. I understand it's not only a port, and Talei is not only a director general for this business. He's also intellectual and a thinker from Azerbaijan. And last but not least, we have Madame Wang Dan, who is the executive vice president for Silk Road Fund, one of the new financial institutions that has been set up by the Chinese government to really promote this OBOR strategy. So before I go to our panelists, let me just start by saying that as Jin Yong would know very well, before I joined Partners Group, I was with the World Bank Group for 15 years. And when I left the World Bank Group, which for my World Bank Group former colleagues would know, World Bank is full of acronyms, right? So, but obviously, I thought I would get away from acronyms, which is not exactly the case. Now we have CROSOP, which is difficult to pronounce, as well as OBOR. I don't even know how to pronounce it, but in spite of that, this OBOR concept has really gained a lot of traction. So I will start by sharing with you a sort of anecdotal conversation I had, I think probably 3 years ago in China at one of the World Economic Forum meetings when this topic was very, very new, right? It just came out. People were wondering about what is One Road, One Belt, what's new, why it has such an awkward name, and what's behind it. I recall a conversation I had with my friend Sheikhan Bilek, who was the former prime minister of Mongolia. And at that point, he was very concerned. He said, he was asking me on a panel that, given the definition of the One Belt, One Road, whether Mongolia is part of it, because he was worrying about in the past somehow Mongolia was not technically part of the Silk Road. And I remember we had this very interesting conversation, but he and I concluded that, number one, whether Mongolia is historically part of anything doesn't really matter. I think the idea here from the Chinese side is about the importance of connectivity, right? I think One Belt, One Road is just one word. It's connectivity, connectivity as a new asset class that may be able to promote prosperity and growth. And number two, we agree that I think the wisdom behind such an awkward labeling is that by invoking history, I think what China is telling the world is that, this is something that has been done hundreds of years ago by our ancestors. So there's no reason to debate today whether connectivity is something you can do or not do, right? So connectivity is a fact, it's part of history, it can be done, it's positive. So with that, maybe let me first go to Talei, and we already had a conversation before this about how they see Central Asia, see this One Belt, One Road strategy. Do you agree my point on, agree with me on the connectivity point, or how do you see this thing overall, and what's the impact to you guys? Tali.
Thank you, Kevin. It's a pleasure to be here. History plays a great role in this part of the world, and obviously One Belt, One Road concept is not out of sky. It is tied to history, and historically, obviously, to understand what sort of transportation awaits us in the next 10, 20 years, you have to go back to the history. Obviously, the majority of countries that lay between Europe and Asia, particularly between China and Europe, are landlocked states. So whatever is going to be created along this Eurasian space is going to be slightly different from what you may have seen elsewhere, like Singapore, Dubai, Hong Kong, etc. These places are open to the oceans, and obviously the functions that they perform as hubs slightly different from the original historical land-based hubs. And it is always good to go back a little bit to the history, because what you have today, you have large ocean liners that take 20,000 plus containers at once. It's very difficult to compete with this trade, and majority of Euro-Asian trade is actually going through Suez Canal, more than 90%. So we are coming at the age where there is diversification of routes, and One Belt, One Route is one of those. But historically, obviously, the trade was not done by ships. They were primarily done by camels. And the traders that were walking around along with them, they had only limited capacity. They only passed about 40 kilometers a day. So every 40 kilometers you had to stop. There must have been some sort of motel of 0, 1 star. And it is, in our understanding historically, it's called Karvansaray. In Old Town of Baku, you would actually find a couple of them. Every 200 to 250 kilometers, you had slightly larger caravansarais, hotels of 3 stars, townships where you could stop for a day, trade, sell, and then continue your journey. But your destination was really about 500 to 1,000 kilometers away, which was megapolis. Megapolises, or hubs of Eurasia, were covered. So basically, Bukhara, Samarkand, Baghdad, Tabriz, Merv at certain point, Istanbul, Aleppo. These were the hubs where traders were driven to. These were the places where innovation happened, and a lot of value adds happened in these hubs. So 2 functions for these hubs. One is transit. Obviously, a Chinese going to Baghdad must have passed through Bukhara, because there was some stuff he sold there and certain things he purchased to sell in Baghdad. But history records very few Chinese, if at all, that traveled all the way to Venice. And certainly I can assure you that Marco Polo ended up in China not because of trade. His father and uncle ended up in China because of some 2 Mongol brothers fought, and the way the route they came to Krim and then Samara happened to be occupied by the other brother, so they had to reroute to Bukhara and stay there for 3 years. Then a Chinese emperor invited them to the court, etc. It wasn't about trade. Trade was between hubs, the close hub that is closer to you. So bring this issue to the 21st century. We are at the verge of emerging hubs across Eurasia. These are going to be Turkmenbashi, for example, across Caspian, Aktau, Korgos at the China-Kazakh border, Bandar Abbas in Iran, Poti in Georgia, Mersin, which is in Turkey. Istanbul is obviously a natural hub. And Baku, obviously, is positioned in the middle of this development, and that's why we position ourselves as hub of hubs. In the last 25 years of Azerbaijan history, the most successful case that could be brought in to teach for Harvard Business School could be our oil sector. There is 4 components for its success. Obviously, you must have a product or a project whereby big investor or funds are interested in. And oil and gas, certainly one of those products that has drawn BP, Statoil, Exxons, etc. Second, you must have these big companies who are interested in, because they are going to share their technology, know-how, knowledge. They are willing to transform this to your local economy. Third, it must be under the patronage of a very high-level political figure. In Azerbaijan, it was the late president because it gives confidence to investor, but also eliminates all sorts of interest group mingling, which is common to a developing states. But the most important, the key, is a production sharing agreement, which is a law that guarantees all investments that are in this specific sector. So de facto, we have a free zone in our oil sector. What needs to be done for the future, obviously, while creating these hubs across Eurasia, you have to adapt almost similar model whereby you will have to present a project or product that international investors are interested in. You have to put it under a patronage of very high political figure. You have to come up with a dedicated law that is going to satisfy all international partners or investors, because tomorrow if we have an issue, we don't go to a local court, but we go to London. And certainly One Belt and One Road concept is the key in the success of this hub concept alone. Because without it, obviously you won't have the catalyst of this chemical reaction. Thank you.
Thank you, Tali, for that initial sharing with us. I know you have more ideas to share, but the idea here, I think Tali has pushed the envelope forward, right? It's not only about the Belt and Road, it's about hubs. It's about how the countries who want to take advantage of this increased connectivity, how do they position themselves? And I think the other point I picked up is also about the institutions, right? What type of institutional setup you need to have in order to promote those hubs in those One Belt, One Road. So while we are still on this concept, maybe I can ask Lei from CIC and as well as the Russia-China Fund perspective, can you maybe tell us more about how you think from the Chinese angle, what is One Belt, One Road?
Yeah, sure. First of all, the Russia-China Investment Fund actually is an initiative back to the 2012, even before the initiative of One Belt, One Road. At that time, actually, we found that the Chinese economy and the Russian economy were extremely, complementary. But one question we have, when you look at the bilateral trade, even, back to 2015, we just have the volume approximate 80 billion US dollar bilateral trade, which is much smaller versus the bilateral trade with the European Union as well, United States. Then we start digging into the detail. Then we found actually given the geographic situation actually in Russia, most of the population, they stay in the European part. So they prefer to buy the products from continental Europe. And for the Chinese people, actually, we rely on the export, but historically, we decide to go with the United States and Europe, as the trading partner versus, our neighbor country, Russian Federation. So once we found, we really need to improve the bilateral trade and economic collaboration, then we decide, how should we do? At that time, both countries' senior leadership, they were saying they want to set up this fund to provide sufficient funding to the so-called cross-border transaction between Russia and China. As of today, we already closed approximate 8 transactions. Most of the deal we invest into, they have a very clear so-called Russian and China angle. We invest into the food retail chain, specialty children's schools retail. Most of this company historically they purchase these products from continental Europe, and now we try to introduce the Chinese supplier who may provide similar products, but they don't know how to do the design, how to do the marketing in Russia. Then we introduce these people to our portfolio company and help them to improve their efficiency from a procurement perspective. Then, back to One Belt, One Road. I found actually this concept is very, make a lot of sense actually for the country involved into this initiative. And based on the latest report published by the Chinese government, by the end of 2015, actually already more than 100 countries and global and international organizations joined the One Belt, One Road initiative. And 30 countries had signed intergovernmental agreement with the Chinese government to further develop this concept. And based on all these, I so-called, early achievement, actually Chinese government was saying these countries represent the trading volume is 1 trillion by the end of 2015. And they are willing, to increase this bilateral trading volume into the 2.5 trillion in next 10 years. I think, they have a very ambitious, target, but given all these countries, actually, they have a, very complementary, economy. So I think, once we found, all those projects through, different mechanisms setting up by the different, countries. Definitely, this is a, a target. It's a sort of, achievable in the future. So we have seen, the Chinese government, they established the Silk Road Fund as well, the Asia Infrastructure Investment Bank. All these, new investment arm will further help, all these countries to reduce the bottleneck of the bilateral trade. And RCF as a one of, the pioneer to sponsor, the bilateral trade and economic development between Russia and China. Definitely, we are very interested to involve into all those projects. And right now, we already did one of the investment in Heilongjiang. Actually, it's a railway bridge between the Russian Federation and China. That's the only railway bridge on the Heilongjiang, so-called Amur River. Okay.
Great, thank you. Let me maybe echo 2 points Lei just mentioned. One is that One Belt, One Road is really about trade connectivity and many other dimensions of connectivity, right? You could also even think of as a more thoughtful way of globalization. Essentially, when you have complementarities from many, many countries, in the past, globalization happened in a very organic way, right? So now I think there is at least this umbrella that is putting that connectivity in the framework, and hopefully that would create win-win. And second point I would say is that RCF, as Lei mentioned, is part of the institutional development. At least in this case, it's a bilateral arrangement that I actually will see many of them going forward. I think between China and other countries, when you connect them through investment flows, for example. And speaking of institutions, so let me maybe invite Madame Wang, and the EVP of the Silk Road Fund. It's one of the key cornerstone institutions the Chinese government has set up. Maybe you can share with us a little bit, what do you do? How do you look at the One Belt, One Road sort of umbrella? Thank you.
Okay, thank you, Kevin. I remember that in the first session of this morning, and we discussed the challenges the world economy is facing. And there are some problems for emerging economies. And I think the center of the OBOR initiative is that the connectivity. Connectivity means, of course, railroads, railways, roads, seaports, and also it means the bilateral economic cooperation between China and the rest of the world. And this initiative will strengthen the connectivity of those countries, and therefore to promote the economic development of those countries. And so the Silk Road Fund was established at the end of 2014. Its mandate is to finance long and medium-term projects, and Chinese government has committed $40 billion to this fund. In this world, we have very great demand for infrastructure projects, and according to the projection of ADB, so in Asia and Pacific region, the annual need for infrastructure investment is around $800 billion. And so there is a financing gap here. And for China, so China has large capital as well as some technologies, especially in high-speed railways and in power stations, and also in electricity network. And so China could play a role in promoting the infrastructure investment in those emerging economies. And so after we have established, we have tried several investment in those countries in Central Asia and also in Russia and also in Southeast Asia. And we are a financial investor, and we focus on equity investment, and we also focus on long-term and medium-term investment. Our role, I think we can play a role of leveraging. As you know, so China has large scale of capital, and we have large banks like China Development Bank and also China Exim Bank. They provide debt financing and loans. However, when Chinese enterprises, when they do outbound investment in other countries, they also need equity support. So Silk Road Fund can play a role here. As also discussed in the first session of this morning, and I remembered the chief economist from World Bank, he said that China is undergoing the structural reforms. So the Chinese enterprises, they have started to look for investment opportunities in other countries. When we are looking at projects, we always have this philosophy of mutual benefit. That is, we will look for those projects which are aligned to the economic development of those countries. Of course, we run this fund on a commercial basis, and we ask for return. We work together with a lot of other, like international financial institutions, and World Bank, IFC, ADB, and also EBRD. Also, we work with local companies, with international companies, and also we work together with Chinese companies. I just arrived here yesterday, and I have met some Azerbaijan also businessmen. This OBOR could provide opportunities for these countries. It's a combination of Chinese capital, Chinese technology, and also the technology of other countries, and also their comparable competitiveness. I must say that this fund, so we are open, and we welcome the cooperation and also from other institutions and enterprises. For those projects we have finished, we have closed. We usually work with local partners, Chinese companies, international financial institutions. And through our effort, we can leverage more financing from Chinese banks and also from private capital. And I think that's the role we could play. Okay, thank you, Kevin.
Thank you, Madam Wang. I think we have all heard now those official, the state-backed organizations that the Chinese government has set up or organized, Silk Road Fund, AIIB, BRICS Bank, right, and those organizations. So now let me turn to Jin Yong, representing TPG, spearheading the the emerging market infrastructure effort at TPG, maybe share with us from the private sector investor. We all know that in order to fund a massive effort like this, we need both public and private capital. Jingyong.
Thank you. The Chinese language is always very poetic. So when you think of this one belt, one road, if you hear 5 people, there could be 10 different interpretations. And there's really, the most direct question people often ask me is where the road will be, where the belt. Some of my panelists already touched upon. I think this is not, just a physical infrastructure concept. It's more of a economic integration and trying to figure out where the growth will be for the Chinese economy. And when you think of what happened over the last 15, 20 years, the capacity in China, particularly in infrastructure space, has been just developed to a degree. It's truly pretty phenomenal, very competitive. And clearly, over those years, and most of the build-out has been inside China. So after 2008, after this huge stimulus package, and now we do have an issue in the domestic economy. What do you do with the overcapacity? And when you look at the region, there's a clear need for economic growth, which has been very much constrained by the lack of infrastructure. I spent a few years in IFC. I realized, in some of the neighboring countries, like in Indonesia, 260 million people. It's hard to imagine in one of the fastest-growing regions in the world, about kind of a 25% of the population still have no access to power. And there are a lot of other similar, Bangladesh, Vietnam, the Philippines, you name it. I mean, the fundamental economic growth constraint has been the lack of infrastructure, which itself become a constraint in trading with China. China cannot keep running trade surplus with every country. So I think this one belt, one road idea is beyond just think of building a few roads, building some ports. It's more of how can you kind of create a common prosperity, if you will, to use that word, that China has a lot of capital, $11 trillion GDP, saving rate is high. There's too much capital in China. There's a lot of capacity there. How can you deploy this in the neighboring countries and help to debottleneck some of the constraints and create a new demand for the Chinese economy? So through those mutual trades, mutual investment, we create growth. That's really what we are lacking worldwide. I thought that's really, in my view, is the essence of this. So that's number one. Number two is, this panel, when I was thinking about what to say, is how to finance this. People, when I was in IFC, it's very interesting. Often you finish the official meeting, sometimes the prime minister, sometimes the minister pull me aside and say, hey, how can I get more money from the Chinese government? And people believe this One Belt, One Road is all going to be funded by the Chinese government, like Silk Road Fund, like CIC. I can tell you that's not true, because I have known those organizations really well. Madam Wang has said, and Lei has said, the fundamental driver for those funds is really return. And actually, they do more investment in the developed world than in developing countries. So we need to demystify this idea that One Belt, One Road will be funded by the Chinese money. I think to a certain extent it's true, but cannot be always coming from the government source. And here are some basic facts. I think by explaining this, that's what TPG, why I joined TPG, what we are trying to do. Think of China over the last, I already said 20-some years. They have built pretty amazing capacity, and there's a lot of capital. The return on domestic investment is really rapidly diminishing. So the capital in China need to find a place. Until now, most of the money has been in U.S. Treasury in the developed world. And now combining with some of the execution capabilities is coming out to build bridges, power plants. I always remember this number. It's quite fascinating. Over I remember year 2000 when I joined Goldman Sachs. I was trying, I was told to focus on the power sector in China. At that time, the total installed capacity in a country of size of China about 200 gigawatts. So this is 2000. Right now, 16 years. The total installed capacity is of 1,400 gigawatts. Is 2000. U.S. has twice the capacity as China. Right now, China is number one. The capacity of those power generation only in about 5 or 6 companies. Each of the company has more capacity than many countries. Like UK, the total installed capacity is about 100 gigawatts. I mean, Huaneng Power has maybe 150 gigawatts. So those companies, they have accumulated a huge amount of capacity and also a lot of capital. So for those players, they need to find a place to invest, to expand. And the capital market has given them that capital. So when you think of One Belt, One Road, think about how to finance this. You need to go beyond, think about this money going to be coming from G2G, from government of China to write a check to certain projects. I think if you can get some of that, that's fantastic. But more importantly is to figure out how you are going to engage the commercial players. Over the years, there have been a lot of commercial players. They're very good in certain areas. They are relatively newcomer in a lot of other areas. How you can be a partner with them to really together to build a stronger team than each of you can do alone. And that's really the trick. That's really where I would say in terms of how to get the this One Belt, One Road, there are a lot of underlying projects, how to get this project financed. I think, totally rely on China is not going to be realistic. I don't believe the banks, given, frankly, given their problems, China has a lot of problems right now on the bank balance sheets, on the lot of things is to figure out, for the people in this room and beyond. I think it's a great, figure out how to leverage this new initiative and how to build partnership with some of the Chinese players and really kind of use this initiative to do the thing we always like to do, to do good deals, invest well, and create a return, and eventually create more economic growth, and that will benefit all of us. So that's how I see this One Belt, One Road initiative. It's more of beyond just thinking about the physical infrastructure, figure out how you build a partnership, how understand the Chinese partners, what they are good at, what are the areas they need help, and through that interaction, build a partnership like what China-Russian Fund is doing, and that's where I think for the asset managers and for a lot of people interested in this area, I feel infrastructure emerging market is really one of the more interesting and area for economic growth. And if you do it right, and you can make good return and also do good things for economic growth.
Yes, thank you, Jin-Yong. I think the important point here is that it's not only about the hard infrastructure, it's also about the partnership between public and private. I think the public funding, whether through one of those new institutions or through the World Bank and other development agencies, will certainly play a catalyst role. But as Jin-Yong said, in the end, you got to also bring in private capital. But in order to bring in private capital, the projects have to be commercial, right? So this is definitely not a big Chinese charity who is now going to dole out concessional fundings around the world. I think that's part of the story, right? We need that catalytic role of those fundings, but more importantly, how do we actually find business models that will generate return in the short term and long term to attract private funding, which is a much bigger pool of capital. So with that, I can turn into a little bit more specifics. Maybe a first question is for Talay, right? You already shared with us your intellectual framework of 1-star, 3-star, and 5-star hotels. Mm-hmm. How do you make Baku a 5-star hotel? How do you find that your port? How do you find that business model to attract funding? Who do you talk to when you are thinking about funding?
Okay. That's for you. Yeah. Okay.
Unless you want to talk about Port of Baku, that's fine. Obviously, as I said, becoming a 5-star is the key. If you want to win foreign direct investment, bring a lot of international trade, and link, basically, to be at the linking end of One Belt, One Road concept. Azerbaijan is a pioneer in this transformational concept, and this hub concept that we and the government put forward is really going to have a far-reaching effect in the next 10, 20 years. And I believe it's going to be duplicated, copied in the neighborhood, because as for example, once I told someone at the State Department, it's very difficult to restructure Afghanistan as a whole, but if you take Mazar-e-Sharif alone, it's a very stable place relatively. If you focus on one area, create an island of stability, you can as well achieve quite a lot of economic advancement. What we do in Azerbaijan is, in a way, a copying of our successful case in oil sector into non-oil sector. It is not just about port. Yes, port is a door. You enter, you exit. The smoother you do so, more people will use it. But what's there for your non-oil economy as such? And we are a small country relatively, and there is little relatively transit fees that you can get from this entering and exiting. So it necessitates additional value add concept that comes as a free trade zone nowadays. We are moved to 70 kilometers south of Baku, which is a greater Baku area, and the settlement called Alat. It's a small township of about 20,000 people. The idea of the president is to transform this settlement into a satellite town of Baku. So conceptually, we have integrated model of all highways, railways, seaport, as well as a future airport nearby, and a town. So the model involves a port, a free trade zone, an urban development that could be a freehold city, and an airport. When you put this all together under a legal regime that guarantees the investments and a political umbrella, then you get a product which you can present to a potential investor. I think there are lots of products of this kind in the neighborhood that could attract a lot of foreign direct investments.
Ali, thank you for mentioning that keyword, right? It's a product. You need a commercial model behind a product. You can then attract funding from around the world. So my next question, but I want the audience to also think about what questions you have. But while you are thinking about that, let me have one more question to the other three panelists. And since all three of you are on the capital provider side, right, I think Tali already gave us very much details about what he's running the port, how he designed his product, legal framework, a different synergy between different parts of the project. For you as an investor, each of you in a different form, what specific elements you are looking at? What's the most important one or two elements you look at under this One Belt, One Road umbrella that you would look for in order for your funding to be activated? So that's for all three of you, and whoever wants to go first can take the easy answer. Yeah. Yeah. Why don't you go first?
Okay, so what factors we will look when we are looking for projects for investment opportunities? And as I have just said, first, the project should be aligned to the economic development plan or strategy of that country. For example, as Mr. Tsai has just said, in Indonesia and also in some South Asian countries like Pakistan. So a lot of people can have not access to power. So there is great need for power station, or use hydro or use thermal power station. And in those countries, we try to work with local partners and also using Chinese technologies to build power stations. And for some countries, they have rich resources in oil or gas, and they would like to build refinery and not only rely on upstream of oil and gas. And those countries, as well as Azerbaijan also, this country also is thinking of building a very big refinery. And then we will look at those projects, first of all, to see whether it can meet the demand of that country. And of course, second, it should have return. And as a medium and long-term investment fund, we may not require as high as return those private equity fund. Of course, we will ask a reasonable level of return. And certainly, we will value the partnership. As I have just said, for those projects, we will ask for good partners, not only Chinese companies, but also local partners, as well as some international financial institutions. As a financial investor, so we are not very good specialist in certain sectors or areas. And so it's very important we work together. We say those industrial investors, they have the idea how to run this business, and they have the idea how to operate those projects. And finally, we are also asked and whether the investment projects we are going to put money, whether we need a China element or not. I think so. We can have Chinese capital, like Chinese financing, or Chinese EPC contractor, or Chinese operators. All those are a China element, and also we do not ask for majority shareholders in one project or in one company. And I think basically those are our philosophies. Thank you.
Yeah, can I ask Lei and Jin Yong to hold your thought? Because I just got a gesture. We only have a few more minutes. I want to make sure that we do have an opportunity for the audience to ask, then you'll come back, right? Any questions from the audience that you want to address to the panel? Anything that about One Belt, One Road you still feel a bit unclear, or you have a different angle? Okay, I don't, okay, there's one. Can you, a microphone go to the middle? The lady, if you can stand up, then she will find you with the mic.
I just wanted to ask a question whether there are priority areas for specific countries in the scope of One Belt, One Road. So, for example, for Kazakhstan, it might be certain sectors and certain industries. For Indonesia, that would be others. You outlined that there is a specific requirement to address a need, but do you have in your own minds what this need is against which you're checking whether that kind of need exists?
Madam Wang, that's a question for you, I think, right? It's for Silk Road Fund, for Madam
That's
Wang?
right.
Yeah.
I'm sorry, the last sentence, so I missed a little bit. Yeah, the last sentence.
So my last sentence is, do you have in your own mind what that need for each specific country is which you prepared to finance? If there is all the other conditions present, like Chinese component, like there is a proof of the need from the local partners, but you have your own view what that need is.
Okay. So, as I have just said, so I think the center of this OBOR initiative is connectivity, and also it's for the mutual benefits of China and the rest of the world. And from our point of view, of course, we will work very closely with local governments. And there are some very good Chinese institutes, for example, those institutes like so they are very good at power station, design of power stations. And usually they will design a full framework of electricity power development of one specific country. And they will go to that country, they will consult local people, governments, and also companies. And then they will design very specific power, for example, in 5 years, how to develop the power generation of that country. And this could be a basis for our judgment of what kind of projects we can or we will invest. But they are just the basis, and if you want those projects to be bankable, also there is still a long way to go. And it depends on the policies of those countries. For example, special economic zones, they are quite successful in China. You know Shenzhen, so it's earliest special economic zone in China. Now it's a very prosperous city in China. But when we are looking at those special economic zones to copy this pattern in other countries, then we are facing a problem. In China, why those zones have been developed so fast? Because Chinese government has given a lot of tax rebate for those companies which have factories in those zones. But in some countries, the government has not strong physical position and cannot provide this kind of tax rebate and tax reduction. And so for those economic zones, then they have to rely on the land, on the price increase and of those land. So then it's very difficult to copy this kind of Chinese pattern in other countries. But some of those patterns are workable. For example, manufacturing, export-oriented factories. There are some good examples in East Africa, like in Ethiopia. There is one shoemaking factory in Ethiopia which can provide 3,000 to 4,000 working opportunities for local people. And all those shoes then are exported to Europe and can earn a lot of foreign reserve for this country. So I think we have to look at countries. So different factors will affect the success of that project. There is no universal pattern for a country. And we will think of the comparable competitiveness of that country. And also we will think what we can do and maybe what can Chinese enterprises, what they can provide, what kind of service they can provide.
Thank you, Madam Wang. I think that's a very specific answer. Maybe 30 seconds. Jin Yong, what do you look for as a private equity investor when you look at OBOR related? Okay. Lei, what do you look for?
Yes, actually, probably I can share some, experience and advice to the One Belt, One Road countries, who are considering to attract the investment from China. First of all,
Lei, you have 30 seconds, huh? I'll
Sorry?
give you 30 seconds.
Sure. First of all, you need to set up, a institutional platform, to making sure, there is a, professional firm available for the Chinese investors to team up. That's very important because we have a very strict, compliance policy. So we want to make sure, we invest into those countries without, involving into any, pending litigation or those things. And second of all, actually, you need a very talented investment professional, which has, global experience and may facilitate, the Chinese investors to deploy their capital into the commercial-driven project.
Very
Thank
good.
you.
Yeah, so I think we're running out of time. So I will ask Lei to conclude since you are the host for all of us, right? I think we had a little conversation about why the wording of one road, one belt may or may not be the most accurate. If you can share with the room your version of the story.
Kevin, the host is State Oil Fund, and we have to thank them for this opportunity, but as Azerbaijani, of course, I'm grateful. Obviously, there was a good discussion that we had, and One Belt, One Road, and there was a lot of discussion what, as gentleman mentioned, where this road is going to pass. But now we understand that there might be one belt, but there will be multiple routes. And certainly, along these routes, there will be multiple hubs that are going to emerge to link these routes. And if one country is not cooperating, is not opening, there will be certainly alternative route to reach that mega hub or whatever.
So other than OBOR, you think it's called OB, multiple roads and multiple hubs, which is another acronym which is very hard to pronounce, right? With that, let me just thank you, our panelists. I think we are running out of time, right? Can we big hand for the panelists?